Welcome back, everybody, for my portfolio update for October 2024. So we're back in Snowball Analytics this month, seeing how we did. And I have to say that we have some interesting things to talk about, not just with my own portfolio's performance, but a couple changes that I made in October. Namely, getting out of one stock completely and adding a brand new one. But we're going to get into all that here in a minute. Now, the market in October was down about 1% overall and ended October up a little under 20% for the year in total return. But where did I actually end up for the month? Well, let's find out. Now, this video is actually as of November 2nd, and my account is currently at $324,957 and some change. So if we take a look at the actual breakdown, I've adjusted this to see how we did for October only, and we see that my account is up $7,446 for the month. And if I look at the breakdown of profits, we see that it's $6,646. That's a lot of sixes. And if we take a look at the breakdown, we see in terms of capital gains, I had $4,492 along with $2,149 in realized profit and loss. And that's because I actually sold a couple things in my portfolio this month for a net gain, and we're going to take a look at all those here in a second. I also had my amazing $4 in NVIDIA dividends this month because you know NVIDIA is that huge dividend compounder within my portfolio. And lastly, the various fees that I paid on my sell transactions. Now, as you can see for October, it started with a little dip of its own, but then it was just roaring up for most of the month before coming back down to reality a little bit towards the end. But let's go ahead and see how I did against the S&P 500. Now, for the month, the S&P 500 was down 0.59%, accounting for the timing of my own buys and sells. And my portfolio was up 2.12%. So we outpaced the S&P 500 for the month by a little over 2.7 percentage points and 2.71 to be exact. Now, if we take a quick look at year-to-date performance for 2024, the S&P 500 is up 21.05%, and my portfolio is at 23.72%. So we're finally outpacing the S&P 500 for the year, now by a little over 2.5 percentage points, making a very nice comeback. And then, of course, just for consistency, let's take a look at the performance of my portfolio since I started it on December 8th, 2022. We see that my portfolio was up 39.81% compared to the S&P 500's 45.2%. So since inception, I'm trailing the S&P 500 by a little under 6 percentage points in total return. And if you remember, that number was over 9 percentage points just last month. So we are really making up some ground. And I only know that because I got this lovely comment last month that said, quote, just 9%, that's a huge gap and it will only grow larger as it compounds. LOL. Now, over time, it may still get larger and compound and all those things, but I'm sorry to disappoint you for this month. We're too busy making progress in the other direction. And if we look at my monthly progress, what we can see is our streak versus the market continues, and that means my portfolio has outpaced the market in 4 or 5 months since I made all the changes over the first half of the year. And obviously, there's no guarantee that that's going to continue. If there's a big correction in the market, especially with tech stocks, and of course, my portfolio is going to get crushed, but at least for now, we are making progress, and it's a good sign because we've finally taken over the index year to date, and we're under 6 percentage points since inception. So, exciting stuff. Now, if we take a look at my investment income, specifically for the next 12 months, we see that my annual dividends and interest are up to $1,962 compared to the $1,743 that I had in September, which is a $219 increase from last month, about 13%. And that was mainly due to a few different things happening, namely McDonald's increased their dividend, Visa increased their dividend, I sold a company that was not a dividend payer this month, and I added another company which actually is a dividend payer. So all those things add up to a nice little bump in terms of annual income this month. Now, in terms of the overall dividend yield for my portfolio, it's now about 60 basis points. But let's actually take a look at what dividends hit my account for the month, and this won't take very long. On October 3rd, I got $4 from NVIDIA in 3 different accounts, and I had a total of $4 in dividend income for the month. And I tell you what, I don't know what I would do without those sweet, sweet NVIDIA dividends. I'd be lost. Lost, I tell you. Okay. Let's get to the interesting stuff. So if we take a look at what I actually bought and sold for the month, on October 23rd, I bought 1.5838 shares of Meta at $563.81 a share. On October 25th, I sold 48.83, which is basically my full position of Lulu at $309.66 a share. On October 28th, I bought 76 shares of TSM, or Taiwan Semiconductor, at $197.62 a share. And then on October 31st, I sold 30 shares of Google at $175.18 a share, and I bought 9 shares of Meta at $577.95 a share. So I really wasn't doing anything for most of the month, and all of a sudden, bam, I did like a whole bunch in a week. But let's break down the reasons why I did what I did. So first off, Lululemon. Now I ended up taking about a 3% loss on my Lulu sale, and you might be like, well, why take a loss? Just keep holding it. It actually popped like 7% just this past Friday. And if you remember, as recently as last month's portfolio recap, I said that I was going to wait with Lulu for the next couple of quarters and just kind of see how their growth plan panned out. But then right after that video, Lulu proceeded to go up like 15 to 20% over the next 3 weeks. And at that point, I had to make a decision. Because when I said I was going to wait a couple quarters, I just kind of figured Lulu would trade flat for a while. There really wasn't much news. They had growth headwinds in the US. So when it popped 15 to 20%, I looked around at other opportunities that were available. I said, you know what? I'm going to go ahead and take this gift that I've been given and cut myself a small loss and look for better opportunities that have a better long-term outlook than maybe where Lulu's at right now. Now it's gone up another 3% or so because of Friday's crazy day, but if you remember, Lulu was one of those ones that went down a lot soon after I bought it, and at one point it was down like 20%. Now as a consumer, I still really like their products, but there's obviously growth concerns, and retail in general right now in the US is a little bit of a question mark. So ultimately, I felt after the 20 to 30% run up from their low, basically on no news, it was a chance to look around at other opportunities and put my money in a place that had a better long-term outlook. And speaking of, I decided one of those better opportunities was Taiwan Semiconductor. Now I'm going to do a whole video on TSM breaking down my thought process and all my analysis, but I'll just give you the Cliff Notes version here. Now TSM is a company I've been interested in since I dug into NVIDIA back in March. I even had this note in my watch list entry for TSM, which is basically, hey, you should probably own this dummy. And that's because TSM is literally one of the most important companies in the world when it comes to the advanced chips that are needed for the AI infrastructure boom. They're far and away the market leader there, and you could argue that they're just as important, if not slightly more important, than even NVIDIA. Plus, their customers extend to the other big players as well, like Apple, Broadcom, and just about anyone else who designs these type of chips. Now, in terms of risks, I'll break down the 3 major ones at a high level. And the first one, obviously, is geopolitical. The second is semiconductor cyclicality. And then third, competition from the likes of Samsung and Intel. And here's my quick take on all 3. Now, the geopolitical risk is obviously legitimate, and it's the big reason why I've waited so long to actually add them to my portfolio. But seeing the initial promise in their US plant that should be operational in 2025 is a step in the right direction, even if it means potentially lower margins due to US regulations and requirements. Now, semiconductor cyclicality is definitely true in general, but similar to NVIDIA, in my opinion, this is not a real issue right now because TSM, along with NVIDIA, are both in this accelerated growth phase because of the AI infrastructure boom. And it's not just their partnership with NVIDIA because it's all those other companies they're working with as well. So TSM's issue is being able to provide supply, not demand. Now, when it comes to Samsung and Intel, while technically these are competitors, they currently aren't close to being able to do what TSM does. And TSM has anywhere from 65% to 90% market share in what people call, quote, advanced chips. Now, depending on how you define it and who you ask, that number is slightly different, but either way, they're by far the market leader. Now, look, buying TSM at any point earlier this year or last year would have been a better price than today, but I kind of look at it like when I bought NVIDIA back in March. It was the highs at the time, but over the long term, I don't think it's going to matter. And I know some people may say, but you're cutting a company in Lulu that's up off its lows and trending up for a company that's trading at all-time highs. But just like I talked about in my previous video, I simply looked at where the companies were trading from a value perspective. Because Lulu's trading at a 16 to 17 price to cash flow, and in the retail segment with some growth headwinds in the US, to TSM trading also at a 16 to 17 price to cash flow in arguably the most important tech industry in the world right now. Now, of course, they have their own risks, which are serious ones, but to me, this was just a way more interesting opportunity. And then lastly, I already talked a little bit about how I trimmed Google and put that money into Meta and why. And basically, Meta is one of my highest conviction companies right now, along with NVIDIA and Amazon. And so I wanted it to be my third largest holding because of that. I think Meta getting into search is big, even if it takes time, but I also think that Google has a lot of uncertainty around if they're being broken up, if they're going to be the default iPhone search anymore, and then of course all the other search competitors trying to go after them like OpenAI and Perplexity. But honestly, I didn't think Google had a real search competitor until Meta. Meta. Either way though, I think both companies will probably do well. That's why I only trimmed my position and I didn't cut it completely. But I do like Meta better, and that's why I made the move. At the end of the day, my highest conviction holdings I think should be my largest weighted holdings, and that's what I did. So with that in mind, let's actually take a look at my updated portfolio allocation and weightings. Nvidia still at the top spot with over 16%, Amazon's over 15%, and Meta now third at over 11%. Visa's at 11% as well, and Apple's there at 10.7%. McDonald's is now just over 9%, American Express over 8%, and Cloudflare sitting there at over 5%. Taiwan Semiconductor is new to the portfolio and just over 4.5%. Google is now down to just under 4%, and MSCI is last at 3.73%. Now, if we take a look at which holdings have performed the best overall, and remember this is just price return since I take my dividends in cash to reinvest manually. Actually, first of all, let me go ahead and show you what Lulu ended up with. I took a loss of 3.1%, but in dollar terms, it was about $475. So ultimately, a position that was down about 20% in one point, being able to take a 3% loss, about $500, it's not ideal, but it's not something I'm going to lose sleep over. So now if we take a look at my current holdings, you can see American Express just under 80% total gain, Nvidia up there at 57%, Amazon 21.5%, Apple just under 20%, and Google just under 20% as well. You have Visa at over 18%, Meta at over 14%, and the Meta number is a little bit skewed now because I just bought a bunch at higher prices than what my cost basis was, but still, that's the number. Cloudflare's had a nice bounce back this month and is now over 8%, McDonald's at 7.5%, MSCI at over 7%, and Taiwan Semiconductor is new to the portfolio and down 2.3%. So if we take a look at just the last month, you can see that Nvidia had a great month at just under 14%, Cloudflare over 10%, Amazon over 7%, Visa just under 5%, Google over 3%, and American Express at 0.65%. Now, in terms of my negative holdings for the month, Meta was down about 1%, Apple down 1.7%, MSCI down over 2%, Taiwan Semiconductor down 2.3%, and McDonald's down 2.8%. So overall, this was a really good month, even though it was mostly driven by a few stocks that really outperformed at a high level. But at the end of the day, compared to the index, we did really well. So even though I only still have one of them left, let's take a look at my top 4 for 2024 stocks. Now, as we can see, only one of my top 4 for 2024 is still outperforming the index, and that's Caterpillar, although it's come down a bit from where it was over the last month or so. Now, Visa's had a nice bounce back, but still trailing the index by quite a bit, and Valero and Hershey are now both in the negative for the year, which for Valero is pretty crazy since at one point it was probably up 30 to 40% at least. But it definitely looks like it was a good decision for me to cut both of those earlier in the year. All right, so let's take a look ahead to next month and what holdings I think I'm going to add to going forward. In terms of ones I'd like to be higher in terms of weight, overall, I like where things are at right now, especially since Meta is now my third largest holding and I added Taiwan Semiconductor. So I think I'm pretty good here for now. In terms of ones I think are the best value right now, honestly, it's tough because just about everything that I own has gone up quite a bit over the past few months or so. But just based on valuation and growth numbers together, I would probably say Amazon, Meta, Nvidia, and Taiwan Semiconductor. And I realize that those companies are all close to or at all-time highs. And I know people get bent out of shape about that, but their growth has been really good, so their valuations aren't all that crazy. Plus, their outlook, in my opinion, is really strong. But in general, I wouldn't say there's anything in my portfolio that I view as like a screaming buy right now like I did maybe earlier in the year. So I'll be doing more kind of picking and choosing and just seeing if we get some dips to decide what to do next. But in terms of what I expect to be doing over the next month, probably not much other than looking for good prices on existing holdings, still working on some review videos for Snowball Analytics, FinChat, and seeking alpha picks. So that is coming, especially since Black Friday's around the corner and they have discount offers that they're going to be promoting soon. So if anybody was waiting for that, hopefully you'll have some deep dives that'll help you kind of make any decisions to know what you're getting into. Like we do each month, let's review my portfolio goal and strategy. My goal is to beat the S&P 500 in total return while creating a growing passive income stream for my family. Now, my strategy to achieve it is I want to attach myself to companies with wide moats that are generating increasing cash flow and rewarding shareholders with dividend growth that outpaces inflation or share buybacks that increase their ownership stake in the business. So if I recap what happened this month, my portfolio was up over 2% and outpaced the S&P 500 by over 2.7%. Annual dividends increased by 13%. Only one of my top 4 picks for 2024 is still outpacing the market, and the others are still trailing behind. But overall, this was a great month, up over 2%, outpaced the market by 2.7%, and outpacing the market year to date now. And this is awesome. I think people sometimes assume investing is about always being right, but this is a great case of where I created a strategy. I spent about a full year not really following it very well, so I adjusted my approach, and now I'm seeing progress in the right direction. And to me, this is what investing in stocks is really like at a more realistic level. You make mistakes, you learn from mistakes, you adjust your approach, and hopefully you see progress. So I love it. Now, I'm not sure if I'm going to be buying much this next month, depending on what prices do, but likely just some small incremental adds, and we'll just see what happens in the market. So how'd you all do for the month? Let me know down in the comments. Now, if you missed my video about why big tech is still some of the best companies in the market, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.